Welcome back to goldstocktrades.com. Today we have with us a returning guest, Danny Callow, who's the CEO of African Gold Group, which can be traded as AGG on the TSX Venture. It's a very important time to have Danny here. They just came out with a feasibility study, which is very important for banks, financiers to look at, very important for major mining companies and mid-tiers that they will look at. This is a document that banks rely on and mining companies rely on. This has just been published with some very important numbers that we're going to discuss. But first off, I want to remind my subscribers and the people that follow me Danny's background. Danny is a mining engineer. He's worked with the majors. He's worked on building mines and financing mines. Danny, thanks for being here with us today. And first off, talk to us about your background and what you bring to the African Gold Group right now at this important stage as it is construction ready and you just published a feasibility study.
No, great, thanks. And thanks for having me back. It's always great to chat. So as you mentioned, I'm a mining engineer, which is quite unusual in this junior gold space. My background is in operating mines. I've built probably in the region of about $2.5 billion worth of projects over the last 15 years or so, most of it in Africa, in fact, all of it in Africa, Central Africa, and some fairly tough jurisdictions. And I've taken mines from greenfields like this type of project right through into full production, fairly sizable mines, but I've also done a lot of rehabilitation and fixing of brownfields projects and bringing those back into full production as well. So I know what it takes to do it. I'm certainly not here to drill this deposit for the next 20 years. I think this is a project now on the back of the numbers that we've just delivered that really does need to go into production and operation. And I think between myself and the team that I will bring on board to do this, who are all very experienced in this space of developing and bringing mines into production, we really are in the hot seat to be able to do this quite quickly on the back of raising the money to do it.
And Danny, you worked with some of the majors as well and mid-tiers in your career?
Yep, I spent 15 years with Glencore. Glencore is a fairly large company, very aggressive in terms of acquiring and developing projects. We certainly delivered on all of the commitments that we made in terms of bringing those mines into production, in many cases over-delivering in terms of tons or ounces. And I also spent quite a bit of time with Gold Fields, which at the time was the second or third biggest gold mining company in Africa. So I think I've cut my teeth in the corporate world. Obviously, the junior world is a little bit different, but the building blocks are the same. You have to have a great resource. You have to have good people. You have to have the right jurisdiction. And then once all those jigsaw puzzle pieces are in place, it's fairly straightforward to be able to bring in a highly profitable mine and a great return for shareholders.
So we have as in charge an experienced mining engineer, experienced with the majors and the producers, and we've just published a feasibility study. Already we've seen a big difference. We came out with a feasibility study last summer, but with your experience and the new team that's gotten involved, you've been able to update this feasibility study, and which is really crucial because you know what the majors and mid-tiers are looking for in these projects, whether it's M&A or to get this built and financed. So what is in this new feasibility study that shows a difference in what you've been able to do with this project that might make it more appealing to a major or a major financial institution to build this?
Well, first of all, as I mentioned, you need a good resource. And I think we've delivered a resource of over 3 million ounces now. The second thing you need is be able to convert that resource into economically mineable reserves. And I think the big number here, the big ticket item, is this 66% increase in our mineral reserves from last year's study. Now that's made up of a combination of two things. The one is additional oxides that we continue to drill after July of last year. But more importantly, we also did a lot of work on our sulfide and fresh rock to make sure that that material was feasible to be able to go through the process plant. So this definitive study is very important for a couple of reasons. One, that we've really hit this benchmark number of more than 1 million ounces of reserves, so 1.25 million ounces of. Importantly, 10 years of that 16-year mine life is delivering on average more than 100,000 ounces of gold per annum. So that is a real benchmark that a lot of people look at in terms of a good gold project. And the second thing is that we have opened up the possibility of really developing significantly more resource and reserves now, because of knowing the fact that we can treat the sulfide material, which we didn't know about last year in July. So this is a two-pronged improvement here. One is obviously on significantly more reserves, but the second thing is that we now have a process plant that is flexible enough to be able to treat oxides and sulfides and a mixture of oxides and sulfides together. So what that means is that every ounce that we find on this property now, we'll be able to put through this process plant.
That's very interesting because, you know, I know that there's a threshold that these majors and mid-tiers are looking at, and it seems like we can fit those boxes. But one of the big concerns amongst mining investors is jurisdiction. As you mentioned, that jurisdiction is so important. Yep. You're in Mali, in West Mali, where the productive gold mines are. Mali's one of the biggest gold producers in Africa, but there's been some recent geopolitical turmoil. Could you update my investors on why we should be secure in Mali and why we should be confident that there's going to be banks and financial support for the construction of the Kobada Gold Project, or why the mid-tiers and majors may actually look to maybe double down now, as many of the Mali stocks are on sale right now?
Yeah, I think that's a very good question, and there's a number of answers to it. The first is that Mali is probably the third largest gold producer in Africa, so it's been producing gold for upwards of 50 years. It has a very, very secure and stable mining jurisdiction, in the sense that the mining code is very fair to investors and Malian government alike. So it's not skewed one way or the other, and that doesn't create any tension. Then that makes it a very fair mining code. So we're very happy with that. The ability to deal with government there is very straightforward. I've worked in the DRC, I've worked in Zambia, I've worked in South Africa, and I must say that West Africa is an absolute pleasure. Mali, you can get appointments with government ministers very easily. You can sit down with them, you can discuss things, and generally you can put a rational argument together to get things done. And you've seen that, and we'll talk about it a bit later, in some of the approvals that we've received in our other exploration areas. On top of that, every single mid-tier and major is operating in Mali. So we've seen IAMGOLD and AngloGold Ashanti, Barrick, Endeavour, and you can name multiple others. So, and you know, there are geopolitical issues there. We know that. We're very aware of it. Typically, this happens probably 800, 900 miles away from where we're situated, in the centre and the north of the country. There's certainly a lot of assistance from the European Union and the United Nations to try and eliminate or reduce this terrorist threat. But I will say one thing is that not one mine in Mali over the past 30 or 40 years has ever had any disruption that has caused it to lose one day of production because of any form of serious terrorist or other activity. So I think, you know, even when we saw a year ago now a military coup in the country, not one mine stopped producing, not one mine had any issues with supply. of materials in and out of the project. And the government were very aware that this is a significant contributor to the country's GDP. So I find it an absolute pleasure to work there. I enjoy going there. I feel very safe. I feel that the government is very well geared towards attracting investment there, and that's why you continue to see all of the majors and the mid-tiers operating there. And that's why I'm very comfortable that our project is in the right jurisdiction. And you know, if you look at it geographically, we're 8 kilometers from the Guinea border. There's a mine about 50 kilometers across the way in Guinea, which has just started operating now, which is almost a carbon copy of ours. The company that did our feasibility study, Senet, built that mine. So very confident on the capital numbers that we're producing now. And very confident on the location and the jurisdiction. I know that people often flag Mali as sort of geopolitical risk and bad news, but I certainly, in the 2 years that I've been going backwards and forwards there and operating there, I really find it a pleasure to do business there, and I find the government extremely accommodating and open to discussion and finalising permitting and things like that.
Well, you give some great details and on the history of Mali, and especially all the major mining companies that are currently operating there. It's very important when you're investing in these projects that you know, especially with juniors, if they're the only mining company in the country and there's no mid-tiers or majors yet that are producing, I'd run away. But this, you see here, there's majors, there's mid-tiers, they're producing and they're not stopping. That means that, you know, you're not going to have to be the first mover like some of these other projects in these other jurisdictions. That there's an infrastructure there and there's a history of mining gold in Mali, and there's a great interest from the Mali people. It's a big boost for the economy. What's so important for mid-tiers and majors is to understand the upside potential. You've shown about 3 million ounces. You've improved the mine life. This is construction ready. But I don't think the investment community realize how much upside potential and unexplored areas of this property. I mean, there's 50 kilometers of shear zone. This looks like it's open in many areas. Could you highlight the upside potential? I know that this is a development project and you're looking to build this, but you know, some of the junior mining investors love to see upside, especially for mid-tier or major.
Sure. And look, the first thing I would say there is that I would be, you know, a project is always, there's always a time to bring a project into production, but when you know you have upside, you never stop drilling that project. So even when we see this constructed and producing, I've always had a very simple mantra, and that's if there's additional ounces to find, then we're going to go and find them, because all that does is give you flexibility in terms of increasing the mine life, increasing the output. So this is something that I see that will run in parallel anyway. So if we can get moving and start developing and constructing this fairly quickly, we won't stop drilling. We'll be drilling all the way through that and adding more ounces to the resource and the reserve. But to give you an idea of why I'm so excited about this place, we have 3 contiguous concessions. One is a mining permit. To the north of that is an exploration permit called Faraba. And you may have seen recently that was just renewed again for 3 years. So government are very happy with the development work that we're doing on that. And the one to the southeast is a concession called Kobada Est. Now, all of that makes up around 300 square kilometers approximately. And on top of that, we have around 55 kilometers of shear zones identified on that property through regional exploration. Now, regional exploration is a loose word for a lot of exploration that's happened there, starting from historical artisanal workings. They are the best indicator that there is gold there. To put that into perspective, the artisanal miners normally mine down about 8 or 9 meters, and then they can't go any deeper. and they abandon these little pits that they've been mining. Now, you can follow those pits all the way along these shear zones for kilometers and kilometers that we haven't even put a drill into yet. So whenever we visit that property and we go out and about and we have a look at these extensions to the shear zones, we are seeing evidence of this artisanal mining has happened all the way along this strike. And, you know, again, to put this into perspective, this 3.1 million ounces of resource is sitting within about 4 kilometers of 55 kilometers of shear zones that we've identified. So we've done a little bit more drilling. We've drilled another parallel shear zone to our main shear zone just to test the continuity. We drilled more than 1 kilometer there. We saw continuity all the way through that in drilling results, which means there's gold all the way along that 1 kilometer of strike. We haven't drilled it out enough to bring it into resource yet, so that's obviously a new target. But we also believe that could be upwards of 8 kilometers in strike length. So, you know, the decision here is, you know, not where we're going to drill next, it's just how quickly can we drill this and continue to increase the resources and the reserves. So I really think we're sitting on an absolute monster here. It really is now about being responsible about how we drill it out and how we increase the resource and the reserves. And as I've mentioned, you can do that in parallel to constructing, developing and operating a mining operation. And being a responsible miner, that's what you should do anyway. Because as a minimum, if you're taking 100,000 ounces out of the ground and putting it into gold, you should be replacing that every year until you've got nowhere left to drill. So I see this as a multi-year, multi-100,000 ounce project over a long, long time. And it's really just about how quickly we can expand that resource and how quickly we can get it into production. It's a really exciting project.
And for investors, it's important to realize the African Gold Group is sitting near a 5-year low, 25 million market cap. The gold miners in general, most of the gold miners are sitting at 52-week lows, even though gold's up around 1,700 plus an ounce, 1,750 an ounce. This is an exceptional time for gold mining investors, and especially construction-ready, low-cost projects in jurisdictions, in gold mining jurisdictions like Mali, that has majors and mid-tiers with a long history of mining without stoppage. We have a seasoned CEO mining engineer who has worked with majors and mid-tiers. This fits all of our boxes. So thank you, Danny Callow, the CEO of African Gold Group. Just came out with a feasibility study. So that means that you can go to the banks now, to the mid-tiers, the majors, and show them this document. Investors should realize this is an important time in the history of African Gold Group, and that the management and the board is always there for questions and for more research to this project that's construction ready and that has so much upside potential and is a low-cost producer in West Africa. Thank you, Danny. Is there anything else that you'd like to conclude with?
No, again, just thank you for your time and watch this space. I think we're in a very transformational period now, as you say, in terms of the gold industry. And as a development project ready to go, we really should be in the starting blocks and moving forward with this. And we are undervalued. We have significant upside in terms of valuation. So I would say watch this space and let's see where we get to in the next 6 to 12 months.